What do you do with the inverted yield curve right now? I mean, do you scream recession, or do what does it take? Is it in a bubble?
Yeah, maybe we pray for sanity in the political sphere. I think, I think we are not horribly surprised that the yield curve has continued to flatten, given the policy uncertainty, given the, almost like yo-yo effects of the trade war. There's just a lot of uncertainty out there, and it seems like the escalation after the last round of trade talks was material. I think it was a material thesis violation for a lot of people that really started to focus people on the downside risks, not only to the U.S., but also to China. Yeah. I mean, I think China is really the underappreciated story here.
Well,
the data continues to come in much weaker than expected, and we're not seeing the offsetting stimulus.
Gene Frieda is always out front on the discussion. There are two items going on in the breaking news now. There is a conference in Hong Kong. Of course, that story still moves. But far more importantly, right now, headlines on the Bloomberg from China, and I would suggest this is from Beijing. China says we'll have to take countermeasures on U.S. moves. U.S. action violates consensus reached at the Osaka meeting. To me, that's the most important headline on first glance, Gene. China says U.S. action deviates from right way to solve dispute. And then Bloomberg headlines as well, the idea that China says U.S. violates Xi-Trump consensus with new 10% tariff. Gene, this is an elevation, is it, of headlines in the first real clarity out of China, moving yields substantially. The 30-year bond plunges 4 basis points to a 1.97.
Yeah, I think that's right. I think, we've been waiting for the Chinese response to this. We knew the leadership was off in their summer retreat in Beidaihe. So I think, what this is telling you is, number one, this isn't going away quickly. But, really the important question to ask is, how does China respond to this domestically? Do they become more hermetic? Do they become more conservative in their reaction function? Because they recognize this is not a short war, this is a long war. And ultimately, what I think it means is that, it's not so much about the currency. I think the currency probably will depreciate over time, but I think their bias is to keep it stable. It's more about, preserving their ammunition, not offsetting the slowdown in growth with rapid stimulus. And it means a slower China, it means a slower world.
If this, Michael, is a problem that we're going to have for a long time, do we assume that a recession really is looming?
I would be careful on the cause and effect of recession and the trade war. I mean, we've been in a substantial industrial production slowdown for a few quarters already, and the trade war certainly is doing insult to that injury. And it has the potential, indeed, to tip the global economy into recession if it dramatically escalates from here. But it's not going to go away so fast, and that, I think, is what terrifies the markets, is how long are the parties here going to wiggle to try and find an equilibrium. And an equilibrium, right, for sure shouldn't and hopefully isn't what we economists call the prisoner's dilemma, which means that you end up with, to both rational players, is a suboptimal sort of locked-in right, position where everybody hurts. And that is where we could go.
Michael, on my first trip to China, I learned very quickly of the unique relationship of Credit Suisse with all of the Pacific Rim. What does all of this turmoil mean for Europe? Is it an opportunity to out-China the United States? Are we all in this together?
Yeah, I think, Tom, honestly, we're all in this together. Europe is probably hurting the most by the trade tensions between China and the US because of Europe's deeply dependent, export-oriented economy of Germany. And therefore, the Europeans who have, if you will, exposed themselves over 10, 15 years to export to China are now feeling the headwind of this trade war more than probably any economy. And that's a real issue, and therefore we are in this together.
Gene Frieda, as we see this on China, and of course with the president's tweet last night, who knows what he'll be commenting on today, that 30-year bond, Gene, is not through the lows seen, let me get that exact time yesterday, not through the lows at midnight, New York time, but we're getting there rapidly. Is there an interventionist success for the Fed or for President Trump, or are they really not helpful here?
By interventionist success, you mean a reaction?
A reaction, a process? How about a policy?
Yeah, I mean, I think the market has become so heavily reliant on the central bank put. I think there's a real concern out there that the central bank, which generally operates on a slower moving average than does the market, just has difficulty kind of appeasing market expectations here. So I think, there will tend to be a very strong bid on bonds into the Jackson Hole conference next week, into the ECB meeting a couple of weeks later. We think it's actually German yields that are kind of driving this rally in global fixed income more than the U.S.
Interesting.
But I think it's going to be really challenging to kind of meet those expectations.